Welcome back to Bazaar Morning Call. Well, this morning looks like it's going to be a decent start to trade. The Nifty has extended its gains for 4 straight sessions now. And this morning, there could be some build-up. But our research team is here to give you the list of top 10 stocks. First up, we have Coforge on our list. If you're wondering why you should be tracking that one, Nimesh is here to get you up to speed. Nimesh, good morning.
Morning, Sonia. So Coforge will be in focus because they've launched the QIP last evening. The company is looking to raise close to 20 to 40 crores by a QIP issue. The floor price is 5% discount. Again, the feedback is that at least there are a few large funds who are willing to buy the entire book. So the demand is going to be quite strong. The entire proceeds will be used to fund the Cigniti acquisition. In fact, I'd said this 2 weeks back that the company is on a roadshow and QIP is likely very soon. I guess once the fund gets raised, you might see some good names entering into the stock. So well, there is a discount, but I'll go with the green because the demand is quite strong in the QIP book.
Got it. All right, Nimesh, thanks a lot for that. And yes, I remember you saying that on closing bell as well. So good on you. Well, there's another large trade that we're looking forward to. That's in Apollo Tyres. Sudarshan joins us to fill us in on that one. Sudarshan, morning.
Morning, Nigel. So as per the offer book, we have Warburg Pincus subsidiary White Iris Investment is looking to sell its entire 3.5% stake. And for the same book was launched yesterday with total offer size is of more than rupees 1,000 crore and floor price is at rupees 463 per share, which is at a discount of 4% to Tuesday's closing price. And earlier to this, in December 2023, White Iris had offloaded 4.5% stake at a price of rupees 440 per share. And after today's sale, Warburg Pincus will be left with 9.93% stake that it holds via Emerald Sage, and there will be 60-day lock-in period if Warburg Pincus plans to sell further stake. And for today, I'm going with red for the stock as floor price is at a healthy discount, but it may turn positive or open higher if blocks are executed in the block window. And stock in the last 1 week has fallen 5% from the high it's seen post earnings. And another positive part is commentary post earnings was strong and was followed by upgrades by some brokerages.
All right, so thanks very much for that. Now, BHEL is going to be the next one in focus. So there is a bit of a dichotomy between the reported numbers and the commentary. What will the stock follow? That's the question. Vamakshi's got details here. Vamakshi, morning.
Well, good morning, Prashant. Yes, you're absolutely right. It's an absolutely weak set of numbers when we look at BHEL. The company has missed the street's expectation on all counts. Revenue has come in at 8,260 crores. And in fact, this is nearly 7% lower than what the street was expecting. The margins have also come in much lower. We were expecting margins of around 14.3%, and the margins have come in at almost 8.8%. It's a nearly 43% miss as far as EBITDA is concerned and a 41% miss as far as net profit is concerned. The receivables also continue to be elevated at almost 8,000 crores. But on the positive side, the company has reported very strong order inflow. In fact, they've reported the highest ever quarterly as well as annual order inflow. In fact, in the fourth quarter, order inflow stood at 41,859 crores, which is up nearly 4 times on a YOY basis. The order book is also at a decadal high for the company. 1.31 lakh crore is where it's at. And in fact, the commentary is in fact something that could actually move the levers for the counter in the trading session today. And that is because they are saying that based on the current order book as well as the execution of the order book, they expect to see nearly 12 to 15% revenue CAGR in the medium term. The declining trajectory of gross margins which has been witnessed so far is now expected to turn. In fact, they're expecting 10 gigawatt of ordering every year. They have nearly 80 train sets of Vande Bharat in their order book, and in fact the delivery is expected in June 2025. Revenue recognition is also expected to start then. So overall, weak set of numbers, but the positive commentary could drive the stock higher in the trading session today.
Okay, that's interesting. So expecting 10 gigawatts of ordering every year. That's BHEL. Let's move on to PI Industries now. Sonal is here to tell us why to watch that one. Sonal, over to you.
Well, you know, Sonia, PI Industries is one stock which has outperformed in terms of their performance and fundamentals in last couple of quarters and has seen both YOY and strong quarter-on-quarter recovery as well. This time around, revenue growth has slowed down, understandably, because it was on a high base. So revenue growth has come in at just 11% for the company. EBITDA has grown by 29%. Margins have also increased 25.4%, and profits are higher by 32% as well. However, in a time when we are seeing sequential recovery across chemical names, this is a company which has seen a decline. On a quarter-on-quarter basis, revenues are down 8%, EBITDA down 22%, and profits are down 18% as well. And if you look at the internals, the agrochemicals and the pharma division, both of them have seen some decline in their EBIT. Agrochemicals, looking at it on a sequential basis, because pharma can only be compared quarter-on-quarter, revenues down 6%, EBIT down 17%. Pharma revenue is down 44% on a sequential basis, and the losses there have expanded to 39 crores versus 18 crores in the quarter gone by. So going with red on the basis of that, yes, YOY numbers are good, but growth levels have slowed down for PI Industries.
Got that. All right, Sonal, thanks for that. Well, going back to Vamakshi, Hitachi Energy, they had guided for double-digit margins by the end of FY25. They've achieved it earlier. Tell us more.
Well, absolutely a positive set coming in from Hitachi Energy. In fact, the stock is expected to open higher today. When we look at the revenues, they've managed to grow by almost 27% on a year-on-year basis, and this growth is largely being driven by solid order execution, diverse revenue mix, as well as focus on continuous improvement in operations. The EBITDA margin has in fact come in at the highest level since Q1 of FY20. EBITDA margin has improved by 361 basis points. They finally hit the double-digit margin mark that they had guided for in Q4 of FY25 in Q4 of FY24 itself. They also have a very strong order backlog. The order backlog is at 7,229 crores as at the year end. In fact, the order inflows for this time around has also seen an uptick of almost 11.5% at 1,407 odd crores. So overall, a good set coming in, strong order inflow. Expect the stock to open in the green today.
Okay, well, thanks very much for that. By the way, you'll hear from the management a little later here on the program. Vamakshi, thank you for the numbers. Now, another sort of high flyer, right? Ircon, kind of the poster boy for the rail PSU space. Stocks up 70% this year so far. Vivek has got the numbers. Vivek, morning.
Well, that's right. Rail PSU stocks have been flying high, and Ircon, again, optically on a year-on-year basis, numbers appear slightly subdued, but as per analyst estimates, the company has managed to beat some of the analyst estimates. Very limited analysts actually cover this particular name. Revenues on a year-on-year basis are down around 1%, coming in around the 3,742 crore mark. Reported core EBITDA that the company has given has jumped up by almost 11.5% to 317 crore. The reported margin is something that is a bit of a positive surprise, coming in at 8.4% versus 7.4% on a year-on-year basis. Profitability down 4%, coming in at the 247 crore mark. The order book is quite healthy. 27,208 crore is where the order book stands at currently. And as expected, the share of the competitive bidding portion is now fallen below the 50% mark, now stands at 49%. Domestic orders are around 91% of the total order book, and international is around 9%.
Okay, thanks a lot for that. The other stock I'm watching this morning is JK Tyres. I'm going with red over there because the numbers came in, and once again, as we've seen the case with most of the tyre companies, the top line growth is in low single digit. There was barely a 2% growth that the company saw on the top line. Revenues up 2% at 3,714 crores. The margins were good. The margins actually went up 280 basis points year on year at 13.5%, and the profits were up about 55%. So it was a mixed bag this time around. But the big positive for JK Tyres is that they have been able to reduce their debt year after year. So balance sheet improvement is a big positive for them. The net debt over the past 3 years has gone down from 4,940 crores in FY22 to 4,500 crores in FY23, and now we ended FY24 with just 3,704 crores of debt. So that's the positive, but I'm going with red because the company in any case has told us in the past that they don't expect, more than a single-digit growth for the entire industry. And this quarter as well has been no different. In fact, we have the management of JK Tyres joining us at 9 a.m. So do stay tuned in for that. Mr. Raghupati Singhania will be with us. But Eris Life and Metropolis Healthcare are in focus. Ekta is here to tell us why. Ekta, good morning.
Well, yes, both on numbers. So I expect Metropolis actually to be in the green based on its operational numbers. But remember that there is news of Ameera Shah stepping down as MD. I'll get to that in just a bit. But first, the numbers. Revenue up 16% on a year-on-year basis. Street was estimating 10% growth. Margins 24.2% versus estimates of 23%. And a profit of around 36 odd crores, which was estimates of versus estimates of 38 odd crores. Q1Q also, there was a margin improvement which came through. Core business revenue was up 15%. Core business volumes were up 7%. True Health Wellness, which is basically their preventive testing, was up 22%. Specialized tests was up 17%. And B2C revenue growth in the city of Mumbai was up 20%. Ameera Shah has stepped down as Metropolis MD. She's going to become executive chairperson and whole-time director. That's probably going to weigh a little bit on the stock. Call is at 9 a.m., so it's going to also be reacting to commentary from the management. Well, Eris Life, I expect the stock to probably be in the red on account of margin pressure. Revenue was up 37%, margins 27 versus 29%. Q-on-Q as well, margins were at 27 versus 36%. So I expect the stock to be under pressure on account of the margins.
All right, Ekta, thanks very much for that. A bunch of other infra names should also be in focus because of specific news flow. Back to Vivek for that. Vivek.
Well, that's right. Watch out for the infra track. Maharashtra-based infra companies will remain in focus. So last evening, what happened is the Maharashtra State Road Development Corporation went ahead and declared the lowest bidders or the L1 bidders for 6 state expressway projects, out of which the share of listed companies is quite large. So 3 listed companies stand to benefit from this particular declaration. Number 1 is GR Infra. They've received 2 orders, and the total order worth for GR Infra is over 4,340 crore. Now, this is for Pune district package as well as Nagpur-Chandrapur access control package. The other stock on the radar will be HG Infra. Again, they've also received 2 orders, and this is for 2 separate projects that the company has, Nagpur-Chandrapur. This is in Ballarpur as well as the Koparna district. Total order value for HG Infra is 3,209 crore. And last stock on the radar would be PNC Infra. They've also received 2 projects. Total orders for PNC Infra is close to 5,000 crore.
Okay, all right, Vivek, thanks a lot for that. Well, let's do a quick recap of all the top stocks we just covered for you. The ones with positive news flow: Coforge, BHEL, Hitachi Energy India, Ircon International, Metropolis, and infrastructure companies. Well, a few stocks will be reacting to negative news flow. We have Apollo Tyres, PI Industries, JK Tyres, and Eris Life Sciences. Well, that's about the equity markets and all the stocks you should track. But for the time being, let's hop across to Manisha Gupta. She's joining to tell us what's going on in the commodities market. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, barring crude oil prices, which have slipped on the back of weak demand from China and unexpected buildup in the U.S. inventory, almost everything in commodities seems to be doing well in Asia markets yet again. You have copper prices trading near those record highs. Aluminum actually seems to have surged yet again 5% overnight, by the way, and it's trading at the highest in 2 years. There are concerns of Rio Tinto declaring force majeure on alumina cargo from Australia refineries, and there is gas shortages in Australia, and that is what the reason for this. And apart from that, the Yunnan hydroelectric power shortages also seem to be adding to the premium. When you look at the precious metal prices, we are trading firm on gold, silver trading at a new 12-year highs right now. So metals continue to do quite well yet again.
Okay, thanks a lot for that. So crude prices falling is another positive for our own markets, is it not? Let's take a quick break on that note. On the other side, we will connect with Deven Choksi, the Managing Director at DR Choksi Finserv, for some stock talk.